So, gentlemen, if I could ask you to introduce yourselves.
Hi, everybody. My name is Sriram with Skuchain. We have a blockchain technology platform where we have built a protocol for the DLPC, or the Distributed Ledger Payment Commitment.
Merlin Dowse, product manager at JP Morgan, covering digital solutions, primarily for the core trade or traditional trade product set. And I also have a vice chair role on the ICC, where I look at the commercialization of the e-rules as well as the validation of the data sets coming out of the DSI.
Thanks for those introductions. Everyone expected this digital ledger technology was going to be the next great thing, and we were expecting, in effect, a great bang where there would be immediate adaptation across the industry. It was going to solve all of our problems, both in terms of data, but also in terms of work-saving capabilities. However, that hasn't happened. But what we have heard is, unfortunately, a series of negative stories about new entrants, fintech entrants into the industry that, for one reason or another, were not successful in their application. And so the perception amongst the public has been basically that this thing is dead in the water. However, I'm hoping through our panel discussion here to prove that that's not true and that there are positive things happening in the industry. A couple of years ago, BAFT was involved in, through a innovation committee in putting together a series of procedures, in effect a rule book for digital ledger payment commitment, the DLPC. It has not really caught on the way that we hoped it would. However, we do have with us today, with Sriram, a live example of how it can work and what those applications can be. And so I'm going to pass the mic, if you would, to Sriram for more of a complete explanation of exactly what the DLPC is.
Oh, thanks, Scott. So, we've all heard of the failures of TradeLens and WeTrade and Marco Polo. And the question is why, right? I'd start off with Bill Gates. He made the statement, we overestimate the speed of change and we underestimate its magnitude. And that's sort of where we're at. What has happened over the last 3-4 years is now new building blocks have formed. Think of them as bridges from the traditional world of ERP, because data is important, needs to be secured, to this new world of Web3, from the traditional world of payments, wire transfers, to this new world of smart contract triggered release of funds, right? And payment risk, right, from the traditional world of law to the model law for the electronic transfer of records. These are all building blocks that didn't exist. And to sort of traverse this new world, you need a vehicle, think of it, and that's the DLPC. That's how we see it. And we think what is needed is essentially an instrument that is legal, that allows for data to be secure, where you have complete control over privacy, and where you're able to effectively leverage the legal system for final recourse. And if you then sort of take that one step further, and you look at all the existing instruments, the EUCP, the letter of credit, digitized invoices. So there's a distinction between digitization and, if you will, digital asset formation. And where the blockchain really comes in is in the formation of this digital asset. And where the problems really lie is having those bridges from the traditional data world to the new data world, from the traditional payment world to the new payment world, from the traditional legal world to the new legal world. We are fortunately at a point where all of that now exists. And I can go into greater detail into how each of these things play out. And we have a one-pager slide that, if somebody could put up, would be useful as background. And the DLPC is a set of standards and best practices that came out of BAFT. So those of you who are not familiar with it, you should be able to find that on BAFT's website.
Here's your slide.
Right. I'd be happy to walk you through all of these issues. These are very specific to the new world of layer 1, layer 2, layer 3 blockchains. We all know about fraud and how you could have an invoice or duplicate invoices. Imagine registering that on, say, an Ethereum. you would essentially have only one version of it. Everybody doesn't have to have a centralized registry. Somebody might want to choose Atom or Binance or Solana or Cardano. And these are the advantages in this new world. But there's only going to be one such instrument, and the vehicle, in this case, this digital asset knows where it is registered, and wherever it is, there's only one of its type. All of you have heard of identity, so that's the other layer, the LEI, the legal entity identifier. How does that relate to the world of the web? We've sort of thought that problem through. At the layer 3 level, you want to have your own data, so you have your own private trade chain, and that allows you to have your internal ERP systems to talk to this new world in a very controlled and a very private manner. We can go down the list. There are you got to be currency agnostic. I mean, there's a lot of fluctuation in currencies, and how do you deal with that, especially in the world of crypto? Imagine the 4-corner model of a letter of credit. Let's make it 3 corners, and the fourth being an escrowed smart contract with collateralized crypto, over-collateralized, got to deal with the variation. You suddenly have solutions. When you start looking at it from this new world, and don't think about migrating old to new, but think of a new solution on the new world, you begin to see possibilities. And what's the use case, you would ask? I mean, yeah, we've got LCs, and we're going to change all our systems? No. The use case is deep geofinance. And what's the driver? ESG, accounting. Imagine somebody in Canada, for example, producing green aluminum, and somebody out of, say, China producing aluminum out of coal. The ingots are identical. How do you get premium for green? How do you essentially have Saab, which is the tier 1 to Boeing, get that aluminum, make a wing out of it, but half of it is green and half is not, because that's what the supply at that time was like. But how do they actually pass on those charges to Boeing? This is where it starts getting interesting, and that's where banks really come in. How do you sort of deal with carbon, if you have certifications that then can have premiums associated with them that are part of your standardized global trade transactions? And happy to go into greater detail there.
Thanks for that. Merlin, there have been a number of obstacles to the adaptation. Some of that is around scalability, interoperability. There's some concerns about regulatory issues. And of late, there's also a fair amount of concern about energy consumption associated with the blockchains. Where do you see the hurdles, and where do you see progress being made in terms of overcoming some of those?
Challenging question. All right. So I take a more of a practical approach, especially when looking at innovation such as blockchain. I think if I look at the colleagues that were presenting on the metaverse yesterday, it's a hype. So blockchain and distributed ledger, it was a hype. Is it dead? No, certainly not. But it's more technology looking for a problem to solve. Have you identified the problem that you need to solve? Is it unique to you? Does it apply to your clients? Right? So what is it that you control, and how dependent are you on a network? Now, some of the unfortunate failures are due to the lack of scalability and creating that network effect, where we've been playing around. Umar was here earlier as well, talking about Onyx and blockchain. So we started playing around. We did various POCs internally, in the distribution space. Can you tokenize the asset, right, and transfer it? But we felt that the market wasn't ready yet for this. And there was that overarching question around the legal framework that supports it. And what are the regulators' view on this type of technology? We've waiting, again, looking at more the traditional trade side, is the MLETR, which Todd had addressed earlier in the opening remarks. Following developments there, I'm very much looking forward to Monday, because then King Charles will be coronated. And then hopefully later on in June, he'll pick up a pen and sign a piece of paper with wet ink, allowing us to, transition into, what would allow for the electronic negotiable instrument. yes, we are playing in this space and how can we create this? But the challenge for a bank is when you look at new technology, where is this going to allow you to increase revenue opportunities, or is it a cost-saving exercise? Now, when you come in and you look at bringing in fintechs, right, and going through that kind of innovation cycle, this comes at a cost. Traditional trade is already very much a very cost-intensive business. So if I'm bringing in a fintech with a subscription or an annual license fee, this is going to add on to already a high level of cost. So am I going to see that return in reducing the number of employees that are going to be needed to support this process? Am I going to originate more transactions, more volume? Am I opening up new markets? So these are the challenges that banks are encountering at the moment. So legal reform is great, working with BAFT and other fellow industry peers and trying to advocate for New York State legal reform, right? We're working on this together. How can we get there? But that's just one hurdle. Next is how do you implement it into the products and services that you offer today? And solutions like the DLPC, great. I love innovation. But how am I going to embed this into what I do today? How am I bringing this into my collection process? How am I doing this in my LCs? Does it have applicability in my supply chain offering, right? And then we have, for those that are US-based banks, right, there are regulatory views which need to be taken into consideration. The OCC has issued 2 interpretive letters, 1174 and 79, which ask you to work with the OCC if you're exploring distributed ledger technology. Right, so this is something that, again, it's a little challenge from an industry perspective, but the technology is there. It will, at some point, it will pick up and we'll be able to use it.
Okay, thanks. Sriram, do you see this as being a bank-driven adaptation, or is it the corporate client of the bank that is pushing adaptation?
It's a very good question, and we've sort of gone back and forth, and we've come to the recognition that banks are a key player in the game, but they're not the driver. They're the follower here, because it's the enterprise, the corporate, that's the key driver. And it's taken us a while to really get to that point of understanding. Earlier, we tried to work with a number of banks, and then we realized that banks are, there really isn't an incentive, at least today, for the banks to effectively, it's a risk working with a startup. It's a risk working with new technology, and there are legal liabilities. There are so many issues, right? And the more you begin to understand it from the perspective of where we see it, we realize that banks have to work with slightly more mature technologies. They need to observe, they need to support, they need to assist in the process and see where it's at, but they're not the guys taking the arrow in the back. We bank with JP actually. Imagine what happened with SVB. I mean, imagine if they're going to do something experimental with our money. Nobody wants that, right? Having said that, we can work with others. And so we're working with non-banking partners, financial institutions, hedge funds, and folks who have that appetite for risk and cost. You talked about cost. There is an inbuilt opportunity cost here in the transference of risk. I mean, if you think of LIBOR plus 0.5 for investment grade and then 24, 36 annualized percentage interest for small suppliers, you've got an opportunity there to sort of extract value and use that value across the chain. And that's how we see it starting.
Okay. Your view on it?
Ultimately, banks are here to serve their customers, corporate or even FI, right? And how can I make the process as efficient as possible for myself? So we've spent a lot of time on digitizing our internal processes, right? But then also it's how do you engage other parties? And I think one key element, especially in the core trade, I'm going to keep going back to this, and the negotiable instrument, is the transferability, right? And interoperability within that ecosystem. So we are testing blockchain solution, right, in its simplest form to see how can we transfer the ownership of a digital asset. And this is helping us also with the legal questions which are arising out of, trying for them to understand and educate. It's an educational process, right? And teaching people this is how it's going to be done and how it can be affected. So again, we're at the start of this transformation process, where it's educational, both from the corporates, what's their benefit. These are potential working capital solutions, which you could create using blockchain solution or distributed ledger technology. But to get into the deep tier, fine, everyone's very eager to replicate what the Chinese have in the domestic market, right? The EBAD solution. Can you take that cross-border? Now, BAFT has a working group out in Asia looking at deep tier financing. Is blockchain the solution to this? Potentially, right? It's an enabler that allows you to do this. Will there be something tomorrow? Who knows? Time will tell.
Sriram, we talked the other day about the potential benefits in terms of deep tier financing. Could you go into that a little bit more?
Sure. So is blockchain the answer to deep tier? No, blockchain is one tool. And what you really need is a digital asset that can control the data, because the most important thing here is the sensitivity of the commercial information that suppliers don't want to share, and they don't want to get squeezed. I think that has sort of put a stop to a whole lot of potential, if you will, enhancements. Oh, sorry, guys. That has put a stop to a lot of potential enhancements. Many of the IBM 360 projects on Hyperledger failed because there was no incentive for suppliers to adopt, because it means sharing data and sensitive data. So you've got to have a mechanism by which you do that. I think that's really one of the legs of data. The second is legal recourse, because it's a promise to pay. And what if you don't pay, right? And that's just one risk. There's risk of fraud, there's risk of performance. You'd have to have all of these risks thought through in an important way. So I think deep tier financing happens after you've thought through all of the legal risks associated with them, the performance risks, the credit risks, the trade risks. And so traditional letters of credit do that. You've already got a robust system, but they can't do deep tier. So then we've got to identify those early markets where you can do the deep tier. I don't think you can do it. I think there are some peculiarities to the Chinese system. We're very familiar with it because a long time ago, Foxconn, the CFO of Foxconn and I had a long chat, and they did something called chain finance. They were able to do certain things there that you're not really able to do outside of China. Maybe now you can. So we are very familiar with this whole space, and we've been watching it, and I think we're still in the child stage. The child has not yet started running. It's now maybe 7 years old. Maybe another 3 or 4 years, then the child grows up and becomes a human that can do things, right? So that's where we're at, I'd say.
Thanks. Do you had also made comment about, we for the last 2 days, we've had a lot of comment about ESG. And in terms of being able to track. In your earlier comment, you made reference to a product, but how can the DLPC go down into that supply chain to provide that information back?
So when we started with something called POP codes, or proof of provenance codes, where we can track the transformation. The reason we call Skuchain is to be able to track the transformation of raw material into finished goods, the actual portion of. And we continue to do that. We have production systems running that as we speak, where we track the recycled gold that's in these electronic instruments, things like that. But we found that we couldn't really get adoption across the chain because there wasn't an incentive, and that's why we did the first letter of credit transaction with Wells Fargo and the Commonwealth Bank of Australia, and that's public, and that taught us a lot. And that's when we started with the DLPC project at BAFT, and that allowed us to do the first DLPC transaction with Mitsubishi and Mizuho. That's also public, and that taught us a lot, and that sort of made us realize that, look, you need to combine those two. The buyers want visibility, and the suppliers want access to low-cost capital. You got to solve both problems, and they both require different solutions, and you have to have. And so the most important one is the financial piece. So the financial piece, when we started looking at it, when we saw the birth of DeFi and realized there's a lot of crypto collateral sitting out there, people who don't want to exchange that, but they want to collateralize it. So that's money that we placed into escrow. That's your fourth corner, four corners, if you will. And it automatically opened the door. Then we needed to have a public chain, and now you've got strong public chains. I mean, layer ones, that's Ethereum and the others. So then we needed to build bridges. We wanted inter-blockchain communication, and that's become now Interchain Foundation, and that's become powerful. So all of that has come together. We've been running real hard. We're a small team, about 40 people, running real hard, trying to build it out. And I'd say in September, we'll go do our first DLPC transaction that scales. So that's kind of where we are on the progression of things. So if you go back and ask ESG, fundamentally, you've got to translate the value to the end buyer. I mean, there's a stick and the carrot. The carrot really is, if I've got premium product, I want to charge a premium price, and it's going through the supply chain, how do I command a premium price? That's the motivation. Take organic food that you buy at Costco. There's an exporter, an importer, and a producer. How does that happen, right? So we can walk through that, and it's really not deep tier financing. It's I want to charge an extra $5 for my organic produce, and I can prove it, and this is how I prove it through the chain. So we got to identify where we as a startup can add value tomorrow, and that's where we are going and adding value. So for that, we got to have system operational, and so if you see all the different steps, it's first understanding how the market is evolving, those bridges we talked about in terms of payment rails and DeFi. Then identifying, okay, which should be the first early market that could potentially take advantage of it, and then building it out. So I'd say where the banks really come in is when we get to large product, large commodities where the margins are low. I mean, we were hearing there's 170 basis point spread for investment grade. So third-party financiers cannot, essentially make money for investment grade parties. And that's when access to low-cost capital from banks becomes important. So I wouldn't think of it as replacing existing letters of credit or your existing invoice discounting business. I think of it as new businesses. You've already got relationships with some of your large buyers. Imagine being able to finance a greater portion of their spend without having to do KYC for the 30,000 suppliers, which simply doesn't scale. These are the kinds of things you can do.
Merlin, can I comment to that?
Yeah, please.
While I appreciate the insight, I think, again, as I started, being practical, I think from a bank's perspective, we service the documentary world today, even supply chain, and where you could use blockchain or distributed ledger is in areas that I control. What can I influence? What can I change for myself, for my own benefit, or for my clients, right? So this is where I think we need to separate items such as ESG from the financial instrument, right? The financial instruments, right, that whether it's the collection, the LC, or the open account, right? How can you use this new technology to expedite the processing of these transactions, right? Reduce your cost and open up other new opportunities, right? And offer access to financing more easily. The ESG angle is interesting, right? But again, the corporate demand, yes, there is some corporate demand, but how am I going to apply the elements of ESG onto these trade transactions, right? You can go down the supply chain. Yes, I'd like to know who the supplier of the supplier is. I'd like to know what the bill of material is and what materials are being sourced, as part of the supply chain. But is that really going to have a direct impact on the financing of the transaction? Yes, maybe not, right? So I think if you're looking to change and you want to bring some of this new technology in, make it into bite-sized chunks, something that you think you can control and you can affect the change for your own organization and for the benefit of your clients, right? And one of the questions on there is, reasons why maybe some of these failed. Were they too ambitious? Did they want to go too big, right? Too soon and really change the world, right? We've had this conversation about, is it digitalization or is it digitization? And I think Sam Matthew, if he might be here from Standard Chartered, put in one of his articles as well. It's like, let's focus on the smaller pieces, right? What we can do, right? Because the digitalization, which is the true end-to-end, right? I click buy, and next thing, you know, the purchase order goes through to the orders, and the raw materials are sourced. We're way far from that, right? That is utopia. That's where we'd like to get to. But let's look at what we can control, use the technology to get us there slowly and surely.
Thanks. Talking about bite-sized pieces for the benefit of the audience, we had a lunch of our GTIC members, our Global Trade Industry Council, and just as a rough poll, we said, who's driving your path to digitization? Is it your corporate client, or is it internal cost-saving potential? And overwhelmingly, the vote was internal. This is not being driven at this point in time by the corporate. And one of the things that was kind of laid out there is that the corporate, if he has 5 house banks, he doesn't want to be dealing with 5 different platforms and putting his staff through the training of 5 different programs for input. How do you see interoperability affecting the lack of adaptation on the corporate side?
Again, it depends on be it the product set. There are multi-bank solutions out there, right? Again, these come at a cost, usually to the banks, right? Are we going to subscribe to all of them? No. There are some which, you know, fit the target client segment that we support, and if there is a business value to, you know, take on that subscription and do the integration. Again, banks, especially, you know, with the size of JP and the large ones, we want to avoid and have to avoid any manual processing. It's all about efficiency. So I need to receive the data. How do I get the data? Right? Now, whether it's through our own proprietary channel, is it through SWIFT, or, you know, some connectivity we have with third party, each individual connection is based on a business case. Is there a need to invest in this integration? Because I'm not going to do it manually. So I need a client or 2 or 3 and significant volumes to support it. And that's where, you know, that's what I do on a day-to-day basis, right? Get requests, oh, can you sign up to this, to that, and explore other fintechs that are out there or other technologies. But the fundamental is build the business case, because you've got to prove to your senior stakeholders, this is where you're going to get your revenue from, these are the transactions you're going to service, and this is the cost benefit that you're going to achieve. And, you know, unfortunately, sometimes no is the answer.
One of our colleagues mentioned the other day that the largest percentage of market in terms of trade finance, the largest single bank is 6% of market. And so that would indicate that it's a fragmented market. It's expensive to bring these systems on. And so collaboration would seem to be a kind of a necessary component. It's one of the things that BAFT is trying to promote. But how, as a bank, how do you see collaboration in the industry moving forward?
So when I got into the role about just over 3 years covering the digital solutions, I'd led a kind of a pilot proof of concept with a number of banks. It's on question on this around the BPO. So we tested the UR-BPO with a number of banks and gave some constructive feedback to SWIFT, also to the ICC, as to why this may work, may not work, what needs to be changed, right? So that was a collaborative effort. I think there were about 5 or 6 banks that actually tested this. So I took that concept and put it into my new role, where we did SWIFT FILAC testing with a number of banks. Some are in the audience today, right? To prove to the industry that yes, you can transfer, yes, it is PDF copies of documents, right? But we all process LCs that don't require a bill of lading or a negotiable instrument, so you can use SWIFT FILAC to digitize the presentation of documents. Now, Some banks have adopted FILAC into their trade processing operations. Some are still questioning whether the true value of it, which makes perfect sense. Try to see, does it add value to your processing and reduce costs, offer additional opportunities to generate revenue. Now, the next one that we're doing right now is, I call it kicking the tires, or playing in the sandbox with a couple of banks looking at how we can digitize the negotiable instrument. And it's through collaboration and testing with each other that we can feed back to the industry on these are some of the pitfalls, things that you need to be aware of, and even with this last one is go back to the legal teams who are being tasked with, coming up with a legal opinion as to whether the MLETR or the bill reform in the UK, can I successfully transfer one asset from one location to another? What's the technology that you're using to support this legal reform that's taking place? Because the legal change is tech agnostic. So big question from the risk folks is, okay, how do you know the technology is sound? How do you know I have possession of this negotiable instrument? How am I going to prove that I'm going to transfer it, right? That I don't have control anymore over this digital asset. So these are all, the fundamentals that we're used to with the paper documents, right? How are we going to do this in the intangible digital universe where we're trying to get to? And hopefully through these proof of concepts or this collaboration with industry partners, we can help others understand and move forward and adopt some of these solutions.
Perhaps we can go to the question. If you want to handle the first one.
Me? Yeah, no, sure.
The question being was regarding the BPO, was it poorly timed or bad innovation?
I have to be very careful here because I'm on the ICC, so no. And it's the same with the URDTT, right? The rules, they're forward thinking, right? And the hope is that that's where we would like to get to. The BPO, yes, it was probably too early. Was the technology poor? No, but it helped us understand what is still needed in order to get to the ultimate digital world. And it's the work that we're doing with a number of banks for the ICC working group on the digital documents. So I'm not sure if everyone's aware, but ICC Digital Standards Initiative released a publication at the end of March about the key trade document data elements. And those are data elements off of documents coming out of the physical supply chain. What this working group is doing is first identifying the bank data set that I need in order to process a collection, an LC, or a supply chain open account transaction. Now, if I have that data set, which of these data elements can I get out of the documents that are coming out of the physical supply chain? And hopefully we can validate these, right? And then you get into data mapping that I can take this, the LEI you referenced, right? Exists on the invoice, and that's what the bank needs in order to do KYC, or is it KYC light, or just, so this is where we're trying to build the bridges.
Okay, thanks. Sriram, perhaps if you could take the second one regarding the deep tier financing.
Right. So I'll go briefly into the ESG question because it sort of relates to that. So if you really think of it from what is the driving force? I mean, there are two, the regulatory requirements. There's one driving force, and the other is buyers wanting to charge premium for premium product like organic products or green commodities. If you think of the supply chain, somewhere in the middle, you lose visibility, right? You might know that you got, I don't know, coffee from Sumatra, but somewhere in the warehouse in New Jersey, it just got switched or something happened to it. So how do you ensure that those things can be dealt with? So the question on deep tier financing and supply, what is the anchor buyer's motivation? The anchor buyer's motivation is wanting to know where the goods are, wanting to know that the goods have the right quality, and paying the premium for it. They really don't want to finance the transaction, but to get that information, I'll give you an example of a retailer whose average order size is $500,000. They'd like to reduce it to $250,000 so they can fine-tune the mix of product. For that, they need access to where the inventory is from their second tier, and they're finding it really hard to get. That's what they need. So they don't, and now, if they were to offer advantageous financing, now there's an incentive. And if there was a mechanism by which that second tier can only share inventory data, none of the commercial terms, now you have a possibility. So first you got to create the possibility, recognizing that that's a use case. And then you come to ESG standards. That's where banks come in, because banks today are the arbiters for green financing. And having the right, and the world of ESG is Wild West today. So we are founding sponsors of the Origin BX Oasis group, which essentially attempts to put together some standards and work with different communities around. But it's a couple of years away. But I think banks can play a key role there.
And of course, one of the reasons why BAFT is pursuing deep tier financing as a subject really has to do with financial inclusion, whereby your primary supplier has access to finance, but as you go further down the chain, it really has to do with that trade financing gap that's trying to be overcome. I guess one final question for you, Merlin.
EUCP. So there's a pending, it should be published hopefully towards the summer. There is an update to the EUCPs where we've looked to include provisions coming from the MLETR into the EUCP. So this has just been approved, so this will be coming towards the summer. And there are other ideas and thoughts on how we can promote the use of EUCP. There are templates that will be accompanying the new release of the EUCP. So banks that are looking to adopt EUCP or offer this as a means of digitizing their letters of credit processes can leverage these templates, because you'd like to exclude some of the usual language that's in there in your LCs to support this. You can do EUCP today, right? Again, it's how do you transfer the copies of the documents and so forth. So don't shy away from it. We would encourage it. I think one challenge, one minor issue which I've kind of taken back into whether it's SWIFT or others is I have no way of tracking how many LCs are issued under the EUCP. No way. Some of the fintech solutions out there, they support it, right? And they track it, but there are no metrics, right? So it's a best guess at the moment. But we offer it, right? The ICC is now creating a directory on their website where banks who do support the EUCP, whether it's from an issuance or an advising perspective, this directory is available for members of the ICC to put your name, your bank name, and a contact email or phone number on there in a way of promoting awareness of my clients asking for an EUCP LC, whether it's out to Singapore, is it to Vietnam, or is it just in Latin America? Which bank can support this today? So this is coming out and being published shortly as well on the ICC website.
Thank you. Thank you. If we, I think one of the questions we have to go away with is where's the low-hanging fruit? Where can we make immediate steps in terms of adaptation or adoption of digitization? And I think the answer for most of us is, for most of our banks, is that really has to do with that cost saving. I think it also, when we look at talent and what will be attractive for new people coming into the industry, this area has to be much more exciting than perhaps being a document checker. We're all facing a career, a retirement cliff in the industry. We haven't talked about it during the sessions, but it's something that's very real. We look at our back office operations and number of very senior people with all the industry knowledge or very close to retirement date, and looking for ways that we can kind of incentivize more people into the industry, ways to transfer some of that knowledge that's there into a digital platform, I think offers a lot of promise for us. So I want to thank our speakers, and I hope you all have a safe trip back. We have one more discussion, but thanks to Sriram and to Merlin.
Thank you, everybody.
Thanks.